We do have our investment committee here, of course. Josh Brown, Stephanie Lincoln, Liz Young, all with me at Post 9, which is helpful today. Josh, you and Steph obviously own Amazon. You want to give me what your takeaway is from what Eamon reported?
So it might be too soon to have a takeaway per se, but I think what's going on here is a fairly novel use of antitrust law. Certainly, there's not a lot of precedent for going after a company because, in fact, they are lowering prices for consumers too much. It's a very strange thing, and I understand the point. The point being that it's really Amazon's logistics that sellers rely on, and when Amazon competes against sellers on its own platforms and it brings to bear all of these interlocking technologies, it makes it almost impossible for someone else to win. That part I kind of understand, but there are competitors. This is not a situation where Amazon completely owns e-commerce. They're just the best at it, but quite frankly, they're losing market share everywhere. And it's very difficult, in my view, to call them a monopolist when you consider the fact Amazon's online shopping business advanced only 5% in the last quarter. You compare that to Walmart, 24% growth in e-commerce. Compare that to Shopify, which is a great option for all of these third-party sellers. Their revenues were up 31% last quarter. If we're talking about cloud, it's the same story. Amazon's cloud segment, AWS, grew 12% last quarter. Take a look at Microsoft's cloud business, Azure. It grew 27%. So Amazon is actually losing share in real life. If you look at data, I know that people have feelings about it too. They feel that Amazon is ubiquitous, hard to compete with, et cetera. But realistically, this is not a traditional monopoly. We are not talking about turn of the century, Gilded Age type stuff here.
You know, Steph, I feel like whenever we talk about, an FTC case regarding one of the tech giants, and remember, we've talked about a number of issues with, the government going after big tech over the last handful of years. I find that investors that I ask often yawn. Yeah. Shareholders also always suggest, it is what it is. It's political. It'll be a fine. No big whoop.
Yep.
Is that the way you feel today?
Exactly. I think the stock, though, certainly will be volatile, right? Especially since it's up 51% year to date. And it's not exactly cheap. It's cheaper than it's been in the last 10 years, but it's not cheap. And also, you have higher interest rates, so that's going against growth in tech in general. First and foremost, I think this is going to take years. Yeah. That's number one. Number two, if they split up this company, I bet you the stock goes higher, because you can then appreciate pure plays, right? AWS, which Josh said grew 12%. It's stabilizing in terms of growth. Maybe it can reaccelerate. Retail, the retail business, margins were double expectations. And the company thinks they can get back to old highs in terms of operating margins. So profitability on the retail side is improving. So I actually think a split, if it happens, it would be positive. And then finally, this company just generated $6 billion in free cash flow last quarter alone. Any amount of fine, they're going to be able to handle.
So let's talk about the markets more broadly today. Tech's obviously down, and Amazon's among the stocks, as you see, even before this news hit, that was down. We're pacing for the worst quarter, Liz, in a year. We've given up 4,300 now on the S&P. Dow's below its 200-day moving average on an intraday basis. I've got 7 of 11 S&P sectors below their 200-day as well, and 17 Dow components. More than half the Dow is below its 200-day moving average right now. How do we view this as a rough month is winding down?
Well, rolling off those stats sounds scary, but the reality is that the local high was July 31st, and the drawdown's been reasonably orderly since then. And we've had rising 10-year yields. We've got a 10-year that since May is up 120 basis points. So it's natural that stocks should pull back. There has been this huge dislocation between where yields have gone and what PEs have done. PEs have continued to rise as yields have risen. So I think that a lot of this is reasonably rational. The signal that we're getting right now from the market, both from industrials and the Dow, just because the Dow is sort of that sentiment for cyclicality, is that maybe people aren't as confident that we will avert recession, maybe not as confident that we will avert a contraction in the economy. And I think that that's also healthy. I think there needs to be a healthy amount of skepticism, which we were missing through the end of July.
Okay.